On behalf of Tata Consultancy Services, provider of the end-to-end central banking and payments market infrastructure solutions across the globe over the last 35 years, and sponsor for this year's virtual edition of CBDC, I hope you've all enjoyed the last 3 sessions as much as I have. Instant payments has been a major topic in the transformation agenda of various countries for a long time. Ideally, they should now be the new normal and be a readily available alternative to traditional ways to pay. However, the reality today is that both the adoption and the real benefits delivered by these are quite skewed. In several countries, instant payments are still marginal for point-of-sale payments and recurring subscription payments. With the focus of the payments industry on driving access, innovation, and alternate payment methods, which includes the increasing shift towards CBDC, it is my privilege to invite the distinguished panelists to discuss the reasons why the application of real-time payments in end customer journeys has slowed down, and to discuss whether or not there is room for central banks and governments to take necessary policy actions and establish other countrywide infrastructures to better facilitate adoption. Today on the panel, we have Frederick Anderson, Customer Success Director at FIS, Sriram Chatty, Global Head of Payments at Tata Consultancy Services, Jerry Gates, Board Member at Currency Research, Jan Pilbauer, CEO of BankServe Africa, Nick Stanescu, Senior Vice President at the Federal Reserve Bank of Boston, and Inge van Dijk, Director of Payments and Market Infrastructure at De Nederlandsche Bank. Thank you.
Good morning, afternoon, and evening. I'm Jerry Gates, Currency Research Board Member, former CEO of Payments Canada, and a former central banker. We have a great panel to explore this issue today. We have central banks, we have technology companies, and we have payment service providers. So we should get a very good and diverse perspective on the issue. Each panelist is going to briefly give a current context perspective of what is happening within instant payments in their jurisdiction or within their purview, and then we're going to open it up for discussion. So we're going to start with Henk from the Netherlands Central Bank, who's replacing Inge this morning. Henk, over to you.
Yeah, thank you very much. Indeed, I mean, I'm replacing Inge. I started a year ago in the market infrastructure department of the Dutch Central Bank. And before that, I was over 5 years head of the issuance circulation section department of the currency management division in the ECB. And before that, I had various expert positions in the ECB, in the director of payments and banknotes. So you asked us about the current state of play. Well, I mean, in the Netherlands, we have since 2019 an instant payment scheme, and I mean, from the outset, when it was already developed in 2015-16, it was clear that instant payments should be the new normal for, at least as it was discussed at that time, for the online payments and the mobile initiated payments. And as of its launch, it had a very rapid take up. It is not regarded as an value added service, so there's no extra cost for it, and automatically all these credit transfers are made as instant payments. From the beginning, nearly all banks were connected to it. We have a very simple, actually, banking landscape in the Netherlands with 3 banks that make up 90% of the market, and another few who make up the rest. So that was relatively easy. What you see now is that the instant payments are mainly, I mean, they're now moving also towards the business to consumer and the business to business payments. The banks are offering, or at least considering to offer, also instant payments for bulk payments and also for standing orders. So I mean, you see that it's increasing. As regards, I mean, we are enthusiastic, of course, about this whole development, because we regard it as a big success. At the same time, I mean, it is of course something that is we regard something that is very normal. Let's say. I mean, we also don't wonder why an email or a WhatsApp is received within a few seconds. So there was not much ado. I mean, there was not much advertisement around the start of the instant payments in the Netherlands. So it's working fine, and it's doing its job, and it's gradually expanding. I leave it with that for the time being.
Thank you, Henk. Now over to Frederick. Frederick, I think you're on mute.
Yeah, is that better, Gary?
There you go. Great.
Yeah, thanks. So it's a pleasure to be here, Gary. Frederick Hansen. I'm Customer Success Director of Instant Payments at FIS. I've been working with instant payments for 10 plus years, lastly at Nets, a Nordic payments processing firm, and then joined FIS early this year. So I'm based out of Oslo in Norway, so the Nordics, so that's where instant payments is the norm. So we have been using instant payments for quite some time. It's very well embedded into the use cases and overlay services that we have here. But as part of my job at Nets and then FIS, we also travel to different nations, different countries where we've seen that instant payments isn't the norm and that we've seen some barriers for adoption in those countries. So super pleased to be here in the show today and looking forward to the discussions.
Great, thank you, Frederick. Jan, how are you and what's happening in South Africa?
Hello, Jerry. Hello, everyone. Great to be here. So yes, my name is Jan Polbauer, and I work for Bank South Africa, which is an African clearinghouse. We are based in South Africa, but we operate in 24 countries across the continent. And South Africa, I don't know, sometimes people don't realize it, but South Africa actually has had a real-time clearing solution since 2006. So we were one of the first countries. But of course, it was built on 2006 technology, and it was really about having a real-time clearing infrastructure. So it was a premium service, and the use cases were more for businesses and stuff. So not a huge adoption, I would agree. But now what we are doing, and we partnered with TCS actually, so Shri will probably share a little bit more about it, because we wanted something modern and we wanted to learn from other parts of the world, but also from the South African story. And we will have a new real-time payment solution. And this time we take a slightly different approach, because as digital payments in Africa, and especially in South Africa, we are still losing against cash. So it's less about the real-time clearing, which I think is now table stake or people should take for granted. It's about how you bring it to the market. What is the customer experience? It cannot be, a premium service anymore. We need to make sure that adoption is out there in small shops around towns or along the road, and that's what we are focused on. So less about the clearing, which I think it's easy, the real-time clearing, but getting the channels, how we can stimulate adoption and how we can ensure that wherever people go to buy their day-to-day necessities, they can actually use digital payment method rather than cash.
That's great. Thanks, Jan. We're going to dig into some of those adoption issues shortly. Now over to Shriram from Tata Consulting.
Thank you, Jerry. Hi everyone. Happy to be here. Just quickly, I think representing TCS here, I think there's a significant amount of investment in the work that we have done in the central banking space, and very specifically on the payments. And I've been fortunate to be involved in building a good amount of India's payment infrastructure, right? And understanding, today's topic of what really makes instant payments or real-time payments work, or even any payments work, and what are the ingredients for the success, right? And I hope to share some of those insights there. But broadly, from the organization perspective, as a head of payments globally for TCS, I think we've been focusing on a variety of interesting challenges, not just building payment infrastructures, largely looking at central bank market infrastructures, which we've been doing for more than 30 odd years. And what we are doing is to evolve some of the things what Jan and some of the other panelists earlier said, which is how do we take the problem away from technology and make it more about adoption? So this unified payments views that we have created, which essentially brings in, the asset agnostic and rail agnostic unified clearing and settlement, right? Where we can not only do the cash, but we could potentially, take anything that has a value, is our commitment to the market. And those are some of the ones that we are rolling out in various countries as we speak, right? Super happy to be here. Very, very keen to discuss and share some of the thoughts what we have. Thanks, Jerry.
Great, thank you, Shriram. And finally, over to North America, Nick from the Federal Reserve Bank.
Thank you, Jerry. Thank you for the opportunity to join this pilot. I'm Nick Stanescu. I am the business executive of the FedNow service, which is the new instant payment system that the Federal Reserve is developing to ensure that institutions of every size and in every community across the U.S. have access to instant payments. Where we are is we're very deep in the process of building this instant RTGS platform. We want to ensure that is highly secure and resilient, while at the same time it's going to be flexible enough and allow industry to innovate on top of it. I'm pleased to report that we made tremendous progress with the FedNow service development, both on the product and technology side, as well as with industry readiness and collaboration, which is quite extensive given the number and diversity of institutions in the U.S. So earlier this year, we narrowed down the timing for the launch of the FedNow service to 2023 from an original target date of 2023 or 2024. And maybe before we go into deeper in the panel, I just wanted to share just a few highlights from this year. One is that we released the ISO 2022 message specification for the service, and we made those publicly available for anyone to download and to start working with them. We also kicked off the FedNow pilot program, which comprises of over 120 diverse financial institutions. 2021 was mainly an advisory year for the pilot. So there was a lot of pilot participants, and the contributions were primarily around what the design of FedNow would look like, and also helping these pilot institutions to get ready for FedNow. In 2022, we'll begin increasingly focusing on connectivity, on onboarding these institutions, and then doing hands-on technical testing prior to FedNow going live in 2023. But a big part of our focus here in the U.S. has been to engage very closely with the industry to provide new tools and educational opportunities for the banks and for the non-banks to support their readiness. We also created a group, a FedNow community, which is joined by over 2,000 organizations, and we also launch new tools to increase engagement. So I'm excited for the milestones that we hit this year, and definitely feel incredibly confident heading into 2022.
Thank you, Nick, and congratulations. You know, most stories are that we add time to our timeline, so it's fantastic that you're dropping a bit of time off. It's really good news. Okay, thank you all for those intros. Let's dive in a little bit here, but stay kind of broad to start. And the first question I'm going to ask is kind of about the state of play globally. So, from the intro, we're questioning sort of the pace of implementation and adoption. So, why has implementation or adoption progressed really well in some countries, as we've heard already in these intros, and less well in others? What have been the key challenges? And we're going to start with Frederick and Shriram on this, who kind of, your companies are working globally on these issues. So Frederick, let's start with you.
Thanks, Gary. So I think instant payments, along with other digital payments, has seen a significant growth in the last 18 months. So the sort of spur to go instant had already been there, but obviously with the pandemic, that's only increased but many times over. So what we have seen in the different countries when traveling around is that there are some key success criteria that, in our point of view, sort of dictates whether the adoption is successful or not. Well, the first one is sort of how well the initiatives have been anchored among the central banks and the regulators. So we see that countries where the central banks are really driving the implementation of instant payments and mandating instant payments, making it easy for participants to sort of onboard to the new central infrastructure, that's been a huge success criteria. So that's sort of the first point. And then number two, I think it's all about the sort of overlay services and what sort of use cases you can implement on the new payment railways. So in the countries where it's been difficult to use the new services, where the services has been priced as a premium option, I think that's been a huge barrier to sort of adoption, because if you want to pay 3, 4, 5 times the fee to do it instant payments versus doing it the normal way, then it needs to be really urgent to use instant payments. So I think that's two success criteria for sure. And then thirdly, I think for the countries that have sort of adopted instant payments as a larger payment modernization initiatives, that's also been one of the huge success criteria. So just not looking at instant as an infrastructure and technology by itself, because I think technology is interesting in itself, but if it isn't really utilized for the good use cases, if it isn't faster, if it isn't cheaper, if it isn't sort of also supported with other processes, such as how do you do financial crime screening, how do you unlock the use cases, how do you ensure inclusion, etc., it's difficult to get that adoption of instant payments. So we do see some recurring trends among the countries that have really grown when it comes to instant payments, such as PIX, Brazil, etc., and some of the countries where it's been sort of more difficult to gain that traction.
Okay, thank you, Frederick. Sri, over to you.
Thanks, Jerry. Frederick, I'll just probably add on to some of the points what you mentioned. But I think it's an interesting puzzle, right? I mean, it's the same technology pretty much we're implementing in different countries, right? And some countries have fantastic uptake, some countries just doesn't have. And it's probably just not just the price or the cost of the transactions, but it also, how do you incentivize everything out? So I think I've spent some time analyzing the jury after you gave me the question, and there is very, very interesting insights, right? One is, what you're seeing, I think there are close to 50 plus countries where there's some version of instant payments running, right? Real-time payments, instant payments, or, one of those. 56 is probably the number, but, that changes depending on, the status that we take. What I saw is the countries which have established real-time payments for the first time, right, which probably leapfrogged into setting this up and doesn't have a baggage from any of those, and where there is a good amount of regulatory support, or they have gone into creating an overall consumption ecosystem, those countries seem to have done well relatively to others, right? Whereas the rest of the ones which created instant payments or real-time payments as something where they can make the payments available faster, simpler, and also safer, it became another choice for the end customer. And that choice, unless you top it up with a significantly better proposition of, by making it available everywhere, becomes it becomes a very key factor on how successful it is, right? So when you take countries like Germany, Spain, Italy, France, and rest of the ones, where the cash is very prevalent. If you take US, it is everything else along with that. So it's the inertia of the incentives, what you can provide, and competing with what already exists, right? So if you take US, it's a card, and they have done a fantastic job in establishing where there is a benefits for everyone, right? Whereas real-time payments, so far what we've seen is, unless they're really structured like a full scheme where you not only look at the benefits, the loyalty aspects, the returns, right? And then the whole scheme stuff where the end-to-end is being taken care of, the customers otherwise are habituated, and you're not showing enough value of things being instantaneous, and cards are instantaneous for I don't know how many years now, right? So that essentially is what I saw is a prime difference in the variation. But on the participant side, just to close it off, there is a significant technology debt what already exists, and the modernization business cases most of the time don't really add up to what exists. But there is a desire to move forward. Everybody wants to do it. There is a momentum, but it's just not making a central infrastructure available, but it is a whole all these variables being added up, right? That really makes it successful. I think that's broadly what I could see, Jerry, right, from a variety of various implementations that I've seen.
Okay, thank you. That's very, very interesting, and some common ground there. So what are the shining examples of how to do this well, and how can we learn from them? Jan, you're going to be a shining example, but you're kind of in process here. But you mentioned you want to learn from others, and what's your perspective on who's doing this really well?
Are you trying to set me up that I upset some countries? And that's good. Listen, so first of all, I think I agree that usually a regulatory push helps, but I would argue that it's not enough. If a regulator tries to push something onto the banks or broader financial institution which doesn't make commercial sense, it usually doesn't go super well. So I think where you see very good examples where the public policy objectives and the commercial interest of the parties in the market actually align, and they have a very clear use case or objective they are trying to deliver. And usually it gives an emergence of, and I think Shri mentioned it, of a scheme. And it's a concept, not many people, especially in the Western world, really paid that much attention to. A few years back, we were saying, no, just build it and they will come. Well, we learned that they don't come unless you start stimulating the market. And if something emerges into a scheme with a very, very aligned drive, what you are trying to solve for, it usually helps. So examples like India with UPI, prompt pay in Thailand, where many things aligned, I think are success stories. But you see it even in Europe, right? Somebody mentioned Swish in the Scandinavian countries and many other schemes across Europe. I think whoever had real-time clearing or real-time payment solution, faster payment solution during COVID benefited, right? Because it really drove adoption. We say never waste a good crisis. So I think COVID helped us moving into the digital. The problem with the established markets, where you mentioned point of sale in the introduction, it's hard to replace, right? There are many commercial interests, many established schemes, a lot of inertia, and inertia is, deterrent of change. So I think Benoit mentioned that we still, have to keep the boot phones, the pay phones. How long has been mobile around? And finally, we, 20 years later, we started decommissioning even the last boots. So there is an inertia. It takes some time. There are some commercial interest at the point of sale in the developed countries, which I think will take time to change. But I would say if you have a scheme, and even Canada with Interac, e-transfer, right? It can emerge either from the central or as a commercial initiative, and usually it's successful if it aligns behind the common goal or common purpose.
Thanks, Jan. You and I have some somewhat painful experiences where we don't have a total alignment when we're trying to push some things. So that resonates totally with me. Shri, do you want to add anything to this?
Certainly, Jerry. I think I'll just add a few thoughts, and I'll also probably take some common examples and try to beat them to see what really have helped them, right? So I think I agree with Jan that just regulatory doesn't help, right? It has to be regulatory, but and establishing the ecosystem so that we can thrive, right? So if we look at the overall real-time payments, instant payments, UK probably took the initial lead. They probably set an example. EU further did. They standardized, and probably ISO 20 or 22, mass adoption and looking at it. But Asia is probably pushing the envelope now, right? And all the examples that we look at, I don't think we can finish without looking at Asia and how are they pushing the envelope. Now, there are two markets that would like to present a divergent view of how this can be accomplished, and probably I think you'll have the rest of the markets falling in between. So if you take India, very heavily regulatory driven, government has a huge push, significant central government support, right? And government created what's called a Digital India Stack, consisting of digital IDs for the entire 1.3 billion, more than 97% of the population already have digital IDs in the country, right? And UPI, right, which is probably the open banking done the right way, again with the regulatory push. Consent framework and third-party PSPs implementation network has been created, so it's open. And today, it's not surprising to see third-party PSPs control around 95% of the traffic of real-time infrastructure, what goes on there, right? Now, is that a problem? Definitely not. But the problem is this, right? With the volumes growing and zero cost, right? And yeah, and to your point, right? This is very skewed towards benefiting the consumption side and not so much on the participant banks, right? So, recent times, I'm sure some of you would have read, some of the large banks have been fined or penalized for a lack of, the service qualities which is to be met, and that number is again, set by the regulatory. So, unless this has been set, very quickly, this need to be taken care of, that we would have a problem with creating a thriving ecosystem that benefits all, right? So, UPI, while we talk in the breadth of fantastic story, good open banking, but the challenge is that regulatory push and the skew toward the consumption is a problem, and zero cost is a big problem, right? Whereas if you take China on the other side, mobile e-commerce push, private entities, two kind of payment systems kind of created the closed loop, fantastic, anything that you can think of can be done, very little regulatory control, right? Now, with regulators focusing real-time view of everything, fraud management and ecosystem collaboration, unless we manage it, and some of the examples what were quoted where, large banks can come together, they can create it. If it is something like VIPs in Norway, works fantastic, where everybody share a common interest. If it is not, then we would have problems here, right? We're seeing UK's NPA vision, very, very nicely crafted. I think it's probably one of the first one that we have seen where there is a very clear separation of clearing and settlement, where payment is a payment, doesn't matter, identify your characteristics, and you create overlays and let market fight for the overlays, right? So that's a good model. They're going slow, but hopefully, they'll probably regain the leadership what they had before, right? Now, just coming to the last bit of South Africa, right, with Jan being around. In my view, right, and again, not because Jan is here, but my assessment of South Africa, I think they spent a good amount of time looking at what seems to be and what can be learned from others. They've not spent too much of time in evaluating years and years and finding out what's the technology. I think Jan probably realized that technology is given and how do we just get it off quickly. But we see a lot of focus on overall ecosystem and the overlays, right? So they already have a blockchain-based directory service created even before the participant would like to. Right now we are we're kind of going to the ecosystem and teaching them how to take advantage of that and what kind of values it can create, right? Similarly, request to pay kind of stuff is coming in, a lot of focus on market innovation. So yeah, that BSA does seem to have doing the right things, maybe all the ingredients to set the right example.
Great, thanks, thanks, Sri. Oops, I think my mic is muted here. At least this is the message. Can you guys hear me?
Yes.
Yep.
Okay, great. Well, let's turn to the central bank view of this. We talked about sort of implementation issues, government policy and central bank direction, coordination issues between payment system operators, participants. And I also think, market size and structure matters a lot in this. And certainly the U.S. has some big challenges there. So Nick, do you want to come in here and kind of give us your perspective on this?
Sure, Jerry. But maybe let me start with what Frederick said. This is not just about infrastructure and technology and instant payments. Then that approach is really important for central banks to take. And also, Ian, with the regulatory push is not enough. I think those are key in terms of what central banks can do to approach the implementation of instant payments. I would say the right way, which is to make sure that they engage with the entire ecosystem in the design of the service, and then also in activating the service. So Maybe some examples in terms of what we did in this space for FedNow to kind of crystallize how this could be done. I'm sure there are different ways. So before establishing FedNow, we really engage on a quite extensive of a listening tour with the industry, banks, non-banks, other central banks, other operator of instant payments, to ensure that when we build the service and what we deliver it, it will meet the needs of the participants. Not just the direct participants, but also the broader ecosystem, such as service provider, corporates and others. Other things that we did is to coordinate with others in the market, other private sector instant payments operators, financial institutions, and other jurisdictions in the development of ISO messages. So we want to make sure that we get this right from the very start, that there is a high level of alignment in messaging and eliminating friction that different message standards could create. And we want to also to encourage coordination and collaboration between the entire payment ecosystem, because each group is so much interconnected. We made that a priority. So in the US, there are a lot of institutions, smaller size type of institutions that are using service providers to connect to instant payment systems, and the ability of those service providers to be ready for FedNow was so much critical that we had to develop a special program to figure out how we can engage them earlier and how to activate it. So we developed this, what we call an ecosystem accelerator group, to give this service providers a way to influence the design of FedNow and for them to enjoy programming that is very much specific to their needs. We also started up a solution provider showcase, which also gives an opportunity to package up and promote instant payment innovation to FI. So those are just some ways that we've done in order to address the entire ecosystem, because I think there are a lot of things that central banks can do to accelerate the implementation of instant payments by engaging very heavily with the industry, with banks, but at the same time also with non-banks beyond the direct participants.
Thanks, Nick. Hank, do you want to add to this?
Yeah, I think I can basically agree with all what was said. I mean, also in the Netherlands, I mean, the most important aspect was that we involved all stakeholders from the very beginning. I mean, it was a specific stakeholder board set up in which the banks and the clearinghouses and corporates, whatever. Also, of course, the central bank and governmental bodies were included. So, I mean, it was clear that it was a common project in which everyone, the ideas about what was expected had to be aligned. Also, there were extensive discussions about the business propositions, and that helped to really set the scene, let's say, to develop a common goal and a common plan. So among others, I mean, it was initially meant only for consumers, the instant payment scheme, but I mean, it soon became clear that also businesses wanted to offer it, wanted to use it. So that already led to the conclusion that, I mean, we should not build something just as an add-on, but I mean, we should build something new that allows for the volumes and values to be processed in the future. And also as regards the common goal, I mean, it was communicated very well by all the different stakeholders. Also the central banks. I mean, the Dutch central bank, of course, had really made itself clear, let's say, that we wanted to see this happen. The European Central Bank also said that in the future, I mean, instant payment should be the new normal. So that really helped. So that was really important. The stakeholder involvement. It, for example, also helped to develop our thinking about what had to be offered. For example, the Dutch system also has a kind of a near instant payments scheme. So that means that in case an instant payment could not be processed within 5 seconds, I mean, it can be buffered and then processed later. instead of being rejected. And that was done with regard to, for example, the bulk payments that would be processed maybe at a later stage, and what is basically now going to be implemented. So that really helped this whole stakeholder involvement, the setting of a common goal. And of course, I mean, what is also important is that you ensure enough reach. Luckily, we are in a situation where, what I already said, I mean, we have a relatively simple banking landscape, but I mean, you have to make sure that at least, let's say, 80 or 90% of all the accounts are reachable with instant payments, because, I mean, if you have a lot of fails, I mean, that doesn't contribute to the, to the appreciation of the instant payments. So I think these are important aspects, and basically, as I said, it already adds to what the others have said.
Yeah, thanks, Henk. Can we just dig a little bit more into the adoption and market side of this? Some of you have raised this already. Issues like pricing and planned migration of payment streams, ties to use cases, value propositions. I mean, Jan, you mentioned scheme, looking at this as a scheme. So how have you looked at this sort of in your context? When have you addressed this in the process? And what worked, well, that you would want to share with others? So let's start with you, Jan.
Thank you, Jerry. Yeah, so the scheme, it comes with a brand and kind of this common experience, because we talk a lot about standardization, but sometimes we forget that when you are trying to launch something to the market, you need to create awareness that when people see the name or the logo somewhere, they exactly know what to expect. They exactly know, what's going to happen when they try to make a payment. What happens if something doesn't go well? And all of that, the rules and kind of this bilateral or multilateral scheme among participants, it's actually more difficult based on our experience than putting the technology together. Maybe because, we have a strong technology partner, but putting the business aspects, it's quite difficult. So you need to do it in parallel. And when you launch it, it has to come together. The other thing for us, especially because people love to use banknotes, right? And I know currency research came from banknotes originally. Banknotes carry something like a national pride. People love the idea of carrying banknotes. And if you are trying to build a digital scheme, you have to give this sense of pride, something which is, linked to your nation, linked to whatever heritage you have. Because that's based on our research we have done with the markets, and especially the diverse markets in South Africa. That's what is quite necessary if you are trying to, chip away from the cash transactions. You mentioned pricing, and let me maybe kind of focus on that one a little bit. Yes, many people perceive cash as being free. We know it's far from free, but from the end user perspective, it's quite free. So what we have is a challenge for clearinghouses. How can we run a service real time that is much more advanced, more demanding than our traditional EFT batches, but we actually have to price it lower? And that's not easy because you need to take advantage of the new technologies. You need to take advantage of everything at your disposal, because the other thing you actually need to do on the real-time solution is you need to have a quite rich functionality. You need to have, and sometimes, many countries forget about these aspects like fraud or risk management. We are learning, if you want the banks and other financial institutions to start promoting the service, they have to feel safe. And having some kind of a robust central fraud solution is actually quite important for the future adoption. So all of these things, it almost feels like, you need to reinvent yourself as a clearinghouse to start looking at things quite differently. And that's what we have been trying over the last 3 years. And the time will tell if we succeed over cash and people start using it.
Yeah, you're going to tell us next year this time how all this went. Frederick, would you want to add anything to this issue, these adoption market issues?
No, but all good points by Jan. So I think from my end, in terms of adding on, I think the starting point is that instant payments and implementation of any new payment scheme doesn't happen in isolation, because you already have some payment railways in place. You already have some use cases in place. So I think the starting point is looking at what sort of pains that you're trying to solve with instant payments, and how can it help improve on that. So I think based on previous experience, what we've seen is basically to do a more sort of phased approach to implementation. It's always sort of easy to take a very ambitious roadmap and saying that this will be our view the next 3 years, 4 years, 5 years. But I think what we see is the market is changing so rapidly, so swiftly, and the demands in the market is going to change on a monthly basis. So you have to do it sort of month by one, in very close collaboration also with the participants in terms of what sort of capacity do they have? Do they need to migrate to ISO 20022 to be able to utilize? What sort of use cases would they like to support, etc.? And that's the only way that you could really ensure successful implementation of instant payments, because there are so many dependencies that you need to equate in before you can ensure that successful implementation.
Okay, thank you. I want to turn to Hank and Nick on this next question. Commercial banks obviously still play a core role in payments today. It's changing with more participants in fintechs, but it's fairly slow to change, at least from my perspective. To what extent have you seen, or do you think that there can be a conflict of interest, or at least strong incentives for commercial banks to not support the new payment methods like instant payments for reasons of market dominance or revenue competition? And if that does exist, and maybe it doesn't exist everywhere, how do we avoid it? How do you manage it? Hank, let's start with you. You've already said, of course, you've got 3 large banks covering 90% of your market. So from the start, it's maybe a bit easier for you. But still, I imagine there was pushback initially. Tell us about the situation.
Yeah, initially there was some pushback, but in the Netherlands we also had experience with our online banking scheme Ideal. It's probably well known to most of you, and it was also developed by the banks. At the time, it was not so obvious that the banks should do that, and in many countries, banks have not developed, or at least at not the same speed as in the Netherlands. And as a result of the fact that the banks were basically nevertheless working on that and looking ahead of what is around the curve, in the Netherlands, nearly all online payments are made via our Ideal scheme. And in most other countries, it's PayPal or the international card schemes that are being used. So here the banks, from that experience, had already kind of a positive idea about, okay, if we step over our shadow and look further ahead, it may be beneficial to develop something like this. And it was very clear. In the beginning, banks were hesitating, and then also about whether or not it should be a value-added service or not. But they also saw that if they didn't do it, if it wouldn't become the new normal, they would probably in a couple of years lose out. So in a way, with the previous experience and the fact that we had indeed a relatively simple banking community, it was the banks were able to agree on that relatively easily. Of course, it's a huge investment so it's difficult to do a huge investment without seeing that there is any additional revenues coming from it. But it's the same with some internet providers. They also offer you higher speeds, sometimes not for higher costs, simply to stay in the market. So it's you have to have a forward looking approach, and that was the case in the Netherlands.
Okay, thanks, Hank. Okay, Nick. Now the U.S. is a different structure than Netherlands, but how are you looking at this issue?
Yeah, Jerry. So I think when we engage with the banks, we heard some hesitance and some questions about the readiness of businesses for instant payments. So in 2020, what we did is we actually conducted a survey of approximately 2,000 businesses of all sizes to just better understand how ready they are for instant payments. And what we learn, in fact, is that there are incentives for commercial banks to move forward and prioritize instant payments implementations. And one of those is because of the businesses and the consumer that they serve. So with this research, what we found is that there is, partially helped by COVID, I'm sure, there is an escalating marketplace demand for instant payments at the US level. So 2/3 of the businesses survey indicated that they will factor access to faster payments in future decisions, or whether or not to switch banks. And also 9 in 10 businesses say that they expect to be able to initiate and receive faster payments by 2023. So we shared some of this statistics with the banks. We made this available for everyone. The survey, we discussed it. It's good for us to understand the demand, but it's also good for the banking sector to understand it as well. And I think, as it was mentioned, delay implementation of instant payments certainly can set organizations back with where the market is heading, because it takes time to finalize product, technology, operational plans, to work with the service providers, and that will put them behind their competitors, banks and non-banks, right? So there is some hesitancy, though, by some of the banks because of the diverse readiness and understanding of instant payments. And I think it's driven in part by not fully understanding the business case and the steps that are needed to prepare for instant payments. But I think this is coming back even to the previous question. This is where central banks can help with education and awareness, and just show how important it is for the banks and the industry not to delay implementation of instant payments.
Yeah, thanks for that, Nick. Let's turn for a second to technology. So many of you have said, one way or another, the technology is not the big issue here. It exists to be able to do instant payments. But of course, banks and others are still running on pretty dated infrastructure. So that has an impact, right? What is technology's role in this? Are we leveraging technology to the fullest for instant payments? What role can technology providers play to help with implementation and adoption? Sriram.
Thanks, Jerry. Yeah, that's a great question, and probably also probably open up a lot more additional questions, right? And representing a technology company, I'll probably try to answer that in two parts. The first part is about setting up a simple infrastructure and role of technology there, and the other bit is from the participant side. I may be risking a little, or maybe getting carried away as well when saying this, but I'll probably say this, right? I think the building instant payment rail is a solved problem. I don't think there is any huge technology challenges except for a few things here and there that we need to worry about. But so at TCS, what we have now moved on and evolved is, instead of thinking about multiple rails trying to do different payment characteristics, how do we unify them, right? Everything is ISO. Your clearing and settlement takes an instruction with a value. If it is not cash, if it can be any alternate asset, can we create an asset agnostic clearing and settlement layer that can, pretty much take anything on the top and provide you with settlement models, right? And this forms essentially our core commitment of working across multiple market infrastructure space from the last 30 odd years, 35 plus markets, right? And that's this kind of technology what we're in. And the underlying technology is, there's so many examples in terms of us from the industries that we can like, especially telcos, stock exchanges, where we handle millions and millions of messages that we handle per second, a millisecond kind of latency. So, some of the inspiration that we are taking is to look at those industries and bring in a similar kind of technology. Jan mentioned about real-time fraud, right? Real-time fraud at central infrastructures is still not a solved problem, right? But can it be solved if it is done for stock exchanges? Absolutely, right? So those are some of the things what we are looking at in how do we bring it in. At the same time, using hyperscalers and a container-based architecture to scale seamlessly rather than trying to look at an earlier models of having 3 or 4 different data centers running with, geographically spread out and different seismic zones, different power supplies. Great problems, but I think industry has long moved on from there to, getting finance at alternate approaches with, fibers being connected, right? So are we really taking advantage of all of that? Probably not to an extent that we should. There is a role of central bank and market infrastructures in looking at some of these capabilities, what already exists, take inspiration from elsewhere, look at some of the technology players who could, look at market infrastructure and see how do we do that, right? So that's feasible, right? That's from the central infrastructure point of view. If you look at the participant side, and it's a completely different picture, right? You have very complex payment landscapes that built over the last 30, 40 years. Payments is very critical aspect of what they do. So you cannot just replace it with something else. And most of the time, the payment transformation that we do at a country level, these are seen as regulatory and not so much about business transformation as what we were speaking earlier, right? Given all of that, they don't really attract top dollars from the business to rethink. So whichever countries or participants that you have seen who've looked at this as an opportunity to transform and create, especially their payment processing infrastructure. What was payment hubs earlier, now probably a more nimble microservices base, completely broken down and unbundled these payment hubs, right? They're really reaping the benefits. And there are multiple such architecture patterns are evolving and across the globe, right? So broadly just summarizing, technology-wise, I think there is infinite more that we can do. There is, a set of problem. I don't think there are any significant set of problem sets that exist, except for a country like US, where we're looking at different zones and how do we ensure that our countries with multiple time zones, how do we provide payments real time 24/7 with all the rest of the capabilities, a different set of challenges, but still solvable, right? So technology-wise, I think there is enough that's available. Participant side, I think the legacy is weighing too heavily, and from regulatory aspects, since most of them are compliance, they're really not attracting the top dollars, and that's essentially is what is causing this gap as what I believe that we are seeing today.
Okay, thank you. Frederick, as the other technology provider on the panel, can you come in on this?
Yeah, for sure. So a good question, and I agree with all the complexity of instant payments. Then technology should be the easy part. And I think where we are today, and I very much agree that the central infrastructure part of instant payments is basically a tick, because we've done so many on a global scale together with all the vendors implementations that we do know some best practices. So this is how you ramp up a central infrastructure. These are the components that you should have, etc. So I very much agree that the difficult thing which is still pending is the participant onboarding, and how do we best enable the participants, because I think banks today have a million and one different priorities that they want to support. We need to make it as easy as possible for them to connect to new payment railways. We very much want them to have sort of an opportunistic view on instant payments. How can they really exploit the possibilities that you have with instant payments in terms of speed, the ability for new use cases, the amount of data that you can store in a payload with instant payments? We very much want that to be the angle, and not the sort of, we need to be compliant and we need to spend as little time as possible on integration services. So I think we've seen some great examples recently with different vendors doing great job in terms of simplifying processes, such as Form 3 in UK, for instance, in terms of making it really easy to get on board to new payment railways, as compared to sort of spending all their efforts on keeping up on format changes, etc. Because we want them to put their efforts into doing innovation and more inclusive value-added services, and not on migrations and compliance.
All right, great. Thank you. We've got a question, starting to get a few questions here from the viewers, and maybe this is a good time to kind of layer in one of these questions, and probably for the central bankers to start here. So there's a question about the BIS Innovation Hub's project Nexus. And I think we're all familiar with what's going on there, what the objectives are. The question is Nexus a feasible model for connecting domestic instant payment systems? What do you think, Nick?
Yeah, so I think it could be. We don't know yet. So as far as FedNav is concerned, this is something that we're gonna look at. But I think this raises the question more broadly about cross-border payments landscape and some of the challenges there. I think there are structural challenges that exist beyond speed and technology, including their high cost. There is different compliance policy and regulatory. So, linking the real-time system, I think, is technically and operational feasible, and there've been pilots that have happened all over the globe that demonstrated that. But being able to do that at scale, there are just some unresolved challenges with coordinating and aligning things such as compliance and governance that will make implementation difficult. I think, again, just a theme that we heard over and over again is the technology is the easy part. It's everything else that is more difficult. And I think it's also a matter of priority. So I know from a FedNow perspective, the primary objective is to get the service to market as soon as possible. Therefore, cross-border payments is not going to be included initially, but it will be something that we're going to look at, and we will look at Nexus to see if it can provide that, foundational way of doing things. So we're just not there yet.
Yeah, priorities are always a big issue, and of course, when you get to talk about cross-border, you also talk about what it does to the existing, correspondent banking models and who gets impacted. But super interesting initiative, and I know we're all going to follow that closely. We've only got about 4 or 5 minutes left, although maybe we can steal a bit of the break. I don't know if the organizers let us do that, but I think it'd be great to spend the last time here looking at the future a little bit beyond, and some of the new kind of things that are coming onto the market. So, of course, this conference has talked a lot about central bank digital currency, but there are, new private sector schemes, even within social media platforms. There are stable coin schemes now that are looking to layer in services, not just payment services, but almost current account type services, liquidity services. So, what should we think about this? How should we think about this in the context of kind of what we're trying to do here with instant payments? Jan, why don't you come in on this one? You're the future thinker.
The future, yeah. It's a million CBCD something question. So first of all, on the project Nexus, I just want to say that I think it's extremely important that we try things, right? And Nexus identified kind of the 3 challenges, like with many initiatives, and we did, our project Jasper in Canada on blockchain. Usually you start with 5 questions, and once you are finished with the project, you end up with 25 questions and even less answers. But we need to do that. On the CBDC, I feel, it's a hype for sure. And the central banks have something to play with, and I think they should play with it because, as Benoit mentioned, there will always probably need to be a choice for people to hold liability directly against the central bank, right? So I wish you luck. There are many things, many questions you guys have to answer. For me, when I kind of abstract again from the infrastructure and from my geekiness as a payments expert, it doesn't really matter, if I'm brutally honest, because regardless if people believe or have trust and confidence in storing money in commercial bank money or in the CBDC or in mobile money or whatever it is, it doesn't solve the problem how you actually create the adoption, right? The clearing and settlement for us as clearing houses, we will have to clear and settle any token of value people will be willing to keep their wealth in. And that's what we are building for, and that's what we will need to do. It's going to be exactly the same issue for CBDC tokens, for commercial bank money, for mobile money. How you get it to the market? How do you convince the businesses that this is the way how they should transact? How do you convince consumers? How do you educate them that it's equally safe or not? So from technical perspective, I honestly think it doesn't matter. There are many interesting questions, which of course I will follow closely. But at the end of the day, I see a future where people will be able to pay portion of their bill from commercial bank money, portion from CBDC, and maybe portion from loyalty points. And that's what I think payments in the future are going to be about.
Okay, and from my stablecoin account too, I hope.
Whatever you believe in, Jerry.
Some have talked about competition between schemes. Others, see a convergence. I like your perspective, Jan, about you have to handle all of these things. But Shri, TCS has a vision which you talk about. You talk about it as embedded payments, and I think this kind of takes the whole payments issue kind of further, like sort of right out to the front end of business transactions. What do you mean by embedded payments? How do you think it'll change how ecosystems really conceive payments?
So, certainly, Jerry. I'll briefly touch upon that, and I'm probably just about a minute or so. So when we talked about establishing ecosystems and what's the secret sauce, what needs to happen, right? And those are the problems that really keeps us thinking and worried about, how do we solve that, right? Is there a solution to it, right? So when you initially asked the question, what makes some market really succeed? So when we analyzed it, some bit what came out really startling, right, is what we started calling now the embedded payments, right? And I'll probably illustrate with some thoughts, right? So we all go to shops. When we shop, when we finish, we enjoy what we do there. We come to the counter. There is an artificial friction, right? The friction is the shopkeeper needs a proof of good funds, and you produce what you believe you have, an instrument that provides the proof. But actually, shopkeeper doesn't really care whether on what is the form in which you're providing, right? So it necessarily comes down to a liquidity problem that you have at that point of time, right? And that liquidity, to Jan's point, can come from cash, cards, loyalty points, coupons. If you're in US, it is probably vouchers or any of the other ones that you could think of, credit lines, BNPL, crypto, or even CBDCs in the future, right? So when we talk about the embedded payments, what we are fundamentally looking at from the ecosystem point of view is how do we now transition from thinking about a payment instrument to how do I achieve the payment outcome with any of the value stored that we have? And in that, you essentially need to provide a promise to pay to the shopkeeper in the retail case, right? And that promise to pay, as you start thinking, is a token of proof with an available liquidity, which in actual fulfillment through the schemes, you will be able to, when you present it, that is valid, right? And that's essentially what comes to this complicated problem of the friction of making the payment, right? So with the real-time payments, I think we have this fantastic opportunity to look at how do we, achieve this. So if we start thinking about real-time payments as another mode, then we will, compete with other schemes. Whereas if we think about what telcos have done, wide voice carriers to wireless data carriers, I think that's fundamentally the switch that we could potentially do, right? So this is what we're thinking. This paradigm is more as an Internet of Payments, right? Just like what internet has done to the content and what telcos have done to the data. So if we think about that today, when we consume, in fact, the show that we are streaming right now, nobody is really thinking how many routers, how many switches, how many security devices, how many ISPs that are sitting in between us and streaming contents, maybe at least 4 continents that we're sitting across. It's all just playing and the content is being consumed, right? And we are really worried about that outcome of how do we do it. If it is the same thing that we apply to the payments, the future, we shouldn't worry about what instrument. We only have to worry about what outcome. That's the essence of the embedded payment. So essentially, the future of payments, as we're seeing, it's probably invisible so that you don't need to worry about what instrument, and embedded because it is embedded into the consumption process of store or a bill pay or whatever else that we think of, right? that's broadly where we are started working to look at understanding the industries, understanding the problems, what the journeys are, where is the payment, where is the friction, and how do we just make it. If a payment is visible, that means we have somewhere lost the battle in the process, right? And that's where there is an opportunity for us to make it invisible, right? That's broadly the embedded payments vision, Jerry.
Okay, thank you. I'm getting lots of messages here saying we're running over time, so we're going to have to leave it at that. Super interesting panel. I want to thank all of you for your time. I hope we maybe can recreate this panel in person next year. That would be fun, and we'll spend time on the future. So thank you all again. And there's going to be a short comfort break of about 5 or 6 minutes, and then Mark Gould, the Chief Payments Executive from the FRB, is going to speak. So thanks again, everyone, and look forward to seeing you in person.
Thank you. Take care.
Bye.
Bye-bye.
Thanks, everyone.
Money has come a long way. From being grains, shells, metal coins, paper, plastic, it has taken many forms and shapes for at least last 3,000 years of human history. But who would have imagined that one day it would become so advanced that it becomes invisible? TCS connected hundreds of banks, financial institutions, and millions of citizens all over India using a secured, resilient, innovative, always-on payment platforms of RTGS, NEFT, and NACH. These advanced financial platforms have now become the digital spine of India's economy, empowering the Digital India vision by providing anytime, any amount, anyone to anyone, anywhere, any device, any channel, any bank to any bank transactions. So many any's, making it one of the world's most innovative payments infrastructures. So the next time you get that SMS ping that says your money's in the bank, TCS helped get it there.
TCS, part of your story.